Hey everyone, it's Kirk here again at Option Alpha. So look, assignments are going to happen if you trade options. And so today I got assigned on a position super early that my bot is trading. And unfortunately, there's not a lot of broker APIs that are available to manage assignments. So this is something you still have to do manually. And I would just want to walk through the process because it just happened to me. I know people have it happen to them often. So I hope this video helps you understand how to close the position and then how to adjust your bot P&L for that position so that you can keep your stats all good to go as you keep moving forward. So here's how it happened. So I got an email from TD Ameritrade that I was assigned on this position right here. So you can see I was assigned one contract. This was the October 20th, 2023 63 strike put options. Now it's October 6th right now, so this is a very, very early assignment that happened. Probably because XLU has been tanking with the market, super deep in the money. So there's still probably some extrinsic value there, but for whatever reason, somebody wanted to assign those contracts and take ownership of the actual shares themselves. So I got left with the long shares there and they wanted to get rid of theirs. So if I go over to my Hexabot that's trading XLU, you can see that the 63 strike puts are right here. So it's this one, still has about 14 days to go. So again, very early in the expiration cycle. And the comparable or the opposing leg that I have, because it's all risk defined, is the 58 strike put option, which is right here. So if I actually open up this P&L for this position, again, you can see right now the stock is currently trading at 55.22, and we had sold the 63 strike put, and then we had bought, in this case, the 58 strike put. And the stock down here at 55, it's deep, deep in the money. It's beyond the short strike. It's beyond the long strike. When we originally entered the trade, it was dead center in the neutral. It was like in the middle, like 65-ish or so. So it's really, really far out there. And that's okay. Sometimes it's going to happen. So you get assigned on a contract. Now, in this case, no brokers right now send an API notification that a contract has been assigned. They don't let Option Alpha know. So you got to go in here and you got to override your position and basically disconnect it from your bot. So that's the first thing that we're going to do is we're going to go in here and just simply override the position. If the bot has some sort of later profit target or something, and you don't override the position, it will try to attempt to close the position, but the position won't exist essentially, or not all the legs of the position will exist. So I'm going to go here and override the position. It's going to say, are you sure you want to do this? And I say yes. Okay, now the position is technically disconnected at this point from Option Alpha, which means that you have to manage the position by yourself. Now, some people, what they do is they try to, I'll show you how I'm going to close the legs. They close the short strike legs, and maybe they'll re-import the long strike legs or the call side spread legs of the position. So they'll close the put side spread, in this case the challenge side, and then they'll re-import the call side if you want to do that. Now, in this case, I'm not going to do that because the call side is so far out that it's going to expire worthless, likely going to expire worthless. I'll keep my eye on it, but it's just so far out with 14 days. It's almost no chance it gets all the way back up to that level. So what I'm going to do is I'm going to close the position, then I'm going to edit the position here using the edit function, and just let my position know that I closed it, and I'm going to give the actual P&L per contract here so we can get all my P&L numbers straight. So at this point, because you override the position, it's essentially for this medium step in this process completely disconnected. We still have all of our trade history here, so we see how much premium we took in on the original position. All right, now before you do anything else, what I want you to do is to pull up your calculator, because this is a really important part of this whole process. And I think a lot of people miss this step. It's actually very easy because at the end of it, we're going to be wondering, like, what do I put in for my total P&L for the position? Now, if you rewind the video just a little bit, you'll see that the max loss on this position should have been no more than $430. That's after all the premiums and credits and everything. Because we're still early in the expiration cycle, there's still some extrinsic value that we can capture by removing the position. So if we let the position just stay here now that one side's assigned, which is holding up a lot of margin and capital anyway, and we just let that position go all the way to expiration, let the contracts cancel themselves out, the different put options, we're going to lose that extrinsic value and we will reach that $430 max loss. But in this case, if we end up closing the position early and just removing the risk, taking the position off because it's pretty much guaranteed to be a loser anyway, then we actually save some money by doing that because there's still some extrinsic value in those contracts. So what you're going to do is you're going to go ahead and take out your calculator. You can do it on your phone or on your computer here, and you're going to put in the premium that you collected. Now, in this case, we put in we collected $70 of premium. So that's what we're going to start with. We're going to start with 0.7, which is the premium that we collected when we initially sold the iron condor. Remember, you're selling an iron condor in this case, so you collect some premium in. Now, because we were assigned the 63 strike put options, what we're going to do is we're going to subtract 63 from this $70 premium. And what does that mean? It means that we were assigned the put options, which means we were forced to buy stock at $63. That was the strike price. So because we were forced to buy stock, which is a debit, we're going to subtract 63 from our original premium that we collected. Okay, so we're going to hold this number here, which is negative 62.3, because it's not the end story. We're going to reverse the trade that we had, that we got assigned. We're going to reverse the shares, and we're going to sell our long 58, I think it was. In this case, 58 strike put option, which is our protection. So our protection kicked in right at 58, even though the stock is trading at 55, and now that put option is worth a lot of money, so we can sell that put option back and we can close out the entire position. So to do this, you're going to go over to your broker platform. In this case, this one's in TD Ameritrade, so I'm over in WebThinkorswim. And I'm going to go to XLU, which is my ticker symbol, and then I'm going to go down here and I'm going to find the individual trades that I want to close. Now in this case, I have my XLU shares and I have my 58 strike put option. You can see that's the 14-day. It's the opposing put option that we looked at earlier. And then I'm going to select the shares also. So I can close this entire thing in one order. You can do them step by step if you want to, but in my case, I'm going to go ahead and close this entire thing in one order just to remove both. That removes the additional margin that the shares are holding, and it also removes the long put option, which is now worth a lot of money. And it was worth a little bit of money when we originally bought it, now worth a lot because the market's gone down. So now I'm going to go ahead here and say I want to close these selected positions. And then this number right here, this covered position here, down at the bottom, this is the number that you're going to use. Whatever this fill price is, you're going to add this back to your original calculation. So if you still have your calculator up here, you can see this is my calculator. It's kind of midway through the steps. I had my original premium. I subtracted the strike price of the shares that I was assigned at 63 because I had to buy shares at 63. And what I'll do is I will add back whatever this net premium is that I collect here. Now, of course, because I'm going to be adding this back, I want to add back as much of it as possible. So the more premium that I can get for selling back the shares and getting out of my original position, the better. The lower this number goes, the worse in this case. So I want to get a lot of premium out of this, but I still want the contract to fill. Right now it's at 58.15, so we'll go ahead and just review and send that order. See if that order goes ahead and fills. And you can see it's been submitted and filled. Right there on the top right-hand corner, it was filled at 58.15. So what I'm going to do is I'm going to go back here to my Option Alpha platform. I'm going to go here to my calculator, and I'm going to add back, in this case, 58.15. That was the premium that I collected by selling back the shares and then selling the long put option that I had. So because I sold both of those, the net result was I collected $58.15 of premium. I'm going to add that back, and when I hit equals, you can see that that gives you your total P&L after the assignment, after all the ins and outs, all the contract stuff. Again, super, super easy if you do it this way. You take your original premium, you subtract the shares, in this case because it was a put option, you subtract the shares that you were forced to buy, and then you add back the value of those shares and contracts that you sold back to the market. In this case, it was 58.15. That gets a total P&L on this position of negative $415. Remember, option contracts are in 100 increments. So again, you can say $415 on this position. So that is the total P&L that we should have on this position, which again is less than the total P&L when we were analyzing it. You can go back in the video and rewind it, and you can see the total max loss would have been $430 if we let it go all the way to expiration. That $15 difference that we see in there, that is some of the extrinsic value that is still left in these contracts. So if you were to hold these things another 14 days or whatever it was, then you're going to forfeit that extrinsic value that's still there. Even though we got assigned early, there's still some extrinsic value that that option contract still has. And so we can capture that by selling it back to the market and not letting it decay all the way as we go towards expiration. So in this case, we saved a little bit of money by managing it early, getting ahead of it, removing the risk, removing the margin, any way to free it up for other positions as we go in, okay? So that's the total P&L that we're going to be looking for. Now, when we go to the Option Alpha platform, what you're going to do is you're going to go here and you're going to go to closed position. So we're going to go ahead and edit the position, because what we want to do here, let me just back up. What we want to do now is we want to make sure our P&L is clean on Option Alpha. If you're tracking it, or if it doesn't matter to you, it doesn't matter. But in my case, I like to keep my stuff clean. I want to make sure I know what I'm doing in these positions, even if I get assigned. So I'm going to go here to edit the position, and then I'm going to go down here to closed. And so right here, that's where I'm going to go ahead and enter the total closing price per contract. Now, this is different than what we did to close the shares and all that other stuff. This is the total closing price per contract. Now, you could think about this as the difference that would get you to a negative total P&L of $415. So again, it's what would the value of those contracts have to be so that our P&L was going to be negative $415. Well, the easiest way to do it, and this is why I keep the calculator up here as we go along with you guys, is simply to, once again, subtract out the premium that you collected from your expected $415 profit. Now, this is the number that we want to get to. This is the number that we're going to double check our accounting and our bookkeeping here on it. We know that our total profit or loss on this position was negative $415 loss. We're going to simply subtract out the premium that we had, again, collected. And that means that net, when everything's said and done, we actually ended up closing the position. The cost to close the position with everything that was included was $485. So what we're going to do is we're going to put in $485 here. And if we did this right, then what we can see is once we hit save, you can see that the net P&L on this position here was in fact $415. That's because we had originally entered the position for $70 and then we had closed the position for $485. Now, another way that you can double check yourself if that doesn't work for you is you can simply calculate the actual cost to close the position. So in the first case, in the first example of walking through this P&L calculation, I started with the actual credit that I received because I wanted to figure out what our actual P&L was as we went through this process. But you can actually start by just disregarding the original credit that you received and just start by looking at the cost to close the position. In this case, we start with a negative $63 because we had to outlay $63 per share. We had to buy stock at $63, right, per share. And then what we did is we sold back the shares in the long put option. So we add back, again, $58.15, which is how much we sold them for. And then that gives you a negative $485. So that, again, is your debit to close here. So there's two different ways you can do it. Then what you could do is you could add back your $70 premium and you get to your $450 total closed P&L after all the premiums and collections and stuff like that. So there's essentially a lot of ways to kind of skin this cat for you guys. I know that this process, it's not always the easiest process. Sometimes it takes just a little thinking through the math and thinking through the calculations here and the fundamentals. But I really hope that this video helped you out and helped you understand how to do it. It is a little bit of a manual process to do right now. We are definitely working with brokers, trying to get them to open up some assignment APIs and give us some more data and more insights so we can help manage this process for you. So if you want that too, please let your broker know you want some of these things open up to Option Alpha so that we can help manage this process and make it easier for you moving forward. Until next time, happy trading.